Okay, so let's start. We want to start a new topic. And our new topic is operating segments. Our new topic is operating segments. So let me introduce it. Let me introduce it first. Now, assuming as a company for the whole year, you made a profit in your P&L account, you made a profit of 20 billion. As a company, you made a profit of 20 billion. But on top of that, it is also possible that you can break down your performance. You can break down your performance on the basis of the different geographical segments, on the basis of the segments that you're operating on. Let me repeat there. I've said, as a company, you made a profit of 20 billion. In other words, you prepared your income statement and you realized that during the year, you made a profit of 20 billion. It could be possible that you can break down your performance as a company on the basis of the different segments that you are operating on. For example, let us assume you are a multinational company, and on top of just determining the profit of 20 billion, you can tell the readers of your financial statements where the 20 billion came from. For example, you might tell us from our Asia market, we made a profit of 5 billion. From Europe, we made a loss of 5 billion. From America, you made a profit of 10 billion. And maybe from Africa, you made a profit of another 10 billion. So you can tell the readers of your financial statements how you performed as a whole. You made a profit of 20 billion, but still on the basis of the segments that you're operating on, you can tell the readers of your financial statements where that 20 billion came from. In other words, you can report your performance on the basis of the different operating segments or segments that you are operating on. Now, here I have looked at it on the basis of the different geographical areas that you are operating on. But it must not be that you can break your performance on the basis of the different geographical areas. No. It may be you are a company like Unilever Company. Unilever Company, again, could have made a profit of 20 billion, but they can tell us how they got that 20 billion on the basis of the different, listen now, on the basis of the different lines of business that they are operating on. Maybe they can tell us from their beauty products, they made a profit of 5 billion. From their household products, maybe they made a profit of 10 billion. And maybe from the other lines of business, wherever it is. So a segment must not be on the basis of geographical. No. A segment can be what we call a business segment, like the beauty products, household products. That is a business segment. Or it can be a geographical segment. But we are saying, if you as a company, you can break down your performance, on the basis of the different segments that you're operating on, listen now, then this International Financial Reporting Standard number 8 requires that as a company now, you should be able to prepare what we call segment report. So we want to talk about how do you prepare segment report of your company and what is an operating segment. So before we look at how to prepare segment report, we need to know what is an operating segment. What is an operating segment? Take one of your segment, whichever, whether it's this Africa, whether it's whatever. What is an operating segment? We define an operating segment as a distinguishable. We normally define it as a distinguishable component of an entity that, number one, can generate its own revenue and incur its own expenses. An operating segment, I'm saying, is a distinguishable component of an entity that, number one, can generate its own revenue and incur its own expenses. Meaning, if it's the beauty products, they don't depend on the household products to generate their own revenues. No, they can generate their own revenues. They can generate their own revenue and it can incur its own expenses. That's number one. Number two, the results of that segment, should regularly be reviewed by a person we shall be calling a chief operating decision maker. A chief operating decision maker. We call it a chief operating. That means the result of that segment should regularly be reviewed by the chief operating decision maker of your company. It could be the CEO who normally reviews the results of your segment on a regular basis, or it could be the departmental head, whoever it is that you have appointed to be reviewing the results of that segment on a regular basis. So that's number two, that the results of that segment should be reviewed regularly by the chief operating decision maker. Good. That's number two. Number three, we are still defining what's an operating segment. Number three, the financial, or we can put it this way, let me put it this way, discrete financial information of that segment should be available. In other words, listen, this Africa market or these beauty products as a segment should be able to generate their own financials without depending on this other segment. That means each of the segment can generate its own financial. That's why we are saying there should be discrete financial information available. There should be discrete financial information available for each segment. So if you are told to define, therefore, what is an operating segment, we are saying an operating segment is a distinguishable component of an entity that, number one, can generate its own revenue and incur its own expenses. That's number one. Number two, the results of the segment should regularly be reviewed by the chief operating decision maker. Number three, discrete financial information should be available. Discrete financial information should be available for that segment. So that's what we call an operating segment. Good. So let us now assume that as a company now, you have identified that you have these four segments. Maybe Africa, Asia, Europe, and so on. Or segment A, segment B, segment C. I am assuming now, as a company, you have identified your operating segments. Now you have your segments. Now listen. When you are now required to prepare the segment report, when you are required to prepare segment report, the question now becomes, what am I required to disclose when I'm preparing my segment report for segment A, for segment B, segment C? When I'm preparing those segment reports, what am I required to include in those reports concerning each of the segment, That is the list I want to talk about now. So let me talk about what are the disclosures required. Don't write fast. Disclosures required. What are the disclosures required? For each of your segment, one of the things you are required to disclose, you as a company, are the sales of the segment. Tell us, what are the sales of segment A? What are the sales of segment B? What are the sales of segment C? And so on. Still, listen, still on the sales, as a company, you are required to distinguish, as on the sales, you are required to distinguish between what we call external sales and what we call intersegment. This is external sales and what we call intersegment sales. What I mean is this: it may be possible that segment A could be selling some goods to segment B. Segment B could be selling some goods to segment C, and so on. So once you disclose your sales, tell us, out of the total sales, how much of the sales of segment A are what they sold to their external customers, and how much of the sales of segment A are the sales they sold to other segments. That's the requirement when it comes to sales. So the first thing you're supposed to disclose are the sales of each segment. And I've said, on the sales, you distinguish between their external sales and their intersegment sales. That's number one. Number two, another disclosure you are required to disclose is what we call the operating profit of each segment. The operating profit of each segment. Tell the readers of your financial statement what was the profit or loss, operating profit or loss of the segment. Maybe segment A made a profit of 5 billion, B made a loss of 5 billion, and so on. So tell the readers of your financial statement what is the operating profit of each of those segments. What is the operating profit of each of those segments? That's a second disclosure that you are required to disclose. Number three, the third item you are required to disclose is any interest revenue. Any interest revenue may be as a segment. Maybe as a segment, you have some investments which are earning you interest, Maybe you have a fixed deposit somewhere earning you interest, or you have invested, and that investment is earning you interest revenue or interest income. Then you are required to disclose that interest income. Number four, we are also required to disclose any interest expense. Any interest expense. Maybe the segment has borrowed and they are incurring some interest expense. You are required to disclose what are the interest expense of segment A, segment B, segment C, and so on. That's another disclosure you are required to disclose. That's number four. Number five, you are also required to disclose any amount of depreciation and amortization. Depreciation and amortization of segment assets. Depreciation and amortization of segment assets. That means, tell us how much was the depreciation of the assets of segment A, segment B, segment C, and so on. That's another disclosure you are required to disclose. That's number 5. Number 6, another disclosure you are required to disclose is what we call any significant non-cash expenses. Significant non-cash expenses other than depreciation and amortization. Don't forget that even these two are non-cash expenses. But we are saying any other significant non-cash expenses other than depreciation and amortization, you are also required to disclose them. That's number 6. Number 7, you're also required to tell us how much are the assets of segment A, what are the assets of segment B, what are the assets of segment C, and so on. So you are required to disclose segment assets. That's number 7. 8, you are also required to disclose segment liabilities. You are required to disclose what we call segment liabilities. Tell us what are the liabilities of segment A, what are the liabilities of segment B, and so on. That's another disclosure you are required to disclose. Number 9 and the last one is tell us what is the profit or loss share from joint venture or associate. Maybe your segment has invested in a joint venture, or they have invested in an associate, and they are entitled to either profit or loss from that joint venture or from that associate. You are required to disclose. So these are the 9 items you are required to disclose concerning each of your segments. Listen, many times the examiner have asked you to state the disclosures required in preparation of segment report. So it's an important list to remember. About what are the disclosures, because many times you're given up to 6 marks, 5 marks, just to list some of those disclosures. They tell you state 5 disclosures that are required for operating segments, and you find the examiner giving you 5 marks and so on. So it's an important list to remember those disclosures. Number 1, we have said you state the sales of each of your segment, and you distinguish between the external sales and the inter-segment sales. Number 2, we have said talk about the operating profit or loss of the segment. 3, we have said tell us what is the interest income of each of your segment. 4, what is the interest expense of each of your segment. 5, what is the amount of depreciation or amortization of segment assets. Number 6, any other significant non-cash expenses other than depreciation and amortization. Number 7, tell us what are the assets of segment A, B, and C. Tell us the liabilities of the segment. And finally, what is the profit or loss share? Profit or loss share. This should be share. Profit or loss share from joint venture or associate. Good. So before we continue, let's put down something on what we have already said. Before we continue, let's put down something on what we have already said. So put down the topic. Put down the topic. Our topic is operating segments. Our topic is operating segments. Operating segments. Then you say this. Say this. An operating segment An operating segment is a distinguishable. An operating segment is a distinguishable component. An operating segment is a distinguishable component of an entity. An operating segment is a distinguishable component of an entity that, then you can put a semicolon. Number one is a distinguishable component of an entity that, number one, that can generate its own revenue, and incur its own expenses. That can generate its own revenue, and incur its own expenses. Number two, whose results are regularly reviewed. By the chief operating decision maker. By the chief operating decision maker of the company. Whose results are regularly reviewed by the chief operating decision maker of the company. Number three, whose discrete financial information is available. Whose discrete financial information is available. Whose discrete financial information is available. Good. Then have another subheading. Disclosures required. Disclosures required. Number one, sales. Then you put a dash. Sales, then you put a dash, then you say this. Distinguishing between sales, then you put a dash. Distinguishing between number A, sales, then you put a dash, then you say distinguishing between number A, external sales, and B, intersegment sales. Sales, distinguishing between number A, external sales, and number B, intersegment sales. That's number one. Number two, operating profit or loss. Operating profit or loss. 3, interest revenue. 4, interest expense. 5, depreciation and amortization of segment assets. 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 Number 6. any other significant non-cash expenses, any other significant non-cash expenses other than depreciation and amortization. Any other significant non-cash expenses other than depreciation and amortization. Other than depreciation and amortization. Number 7. Number 7, segment assets. Number 7, segment assets. Number 8, segment liabilities. Segment liabilities. Number 8. Number 8, profit or loss share. Profit or loss share from joint venture or associate. Profit or loss from profit or loss share from joint venture or associate. Profit or loss share from the joint venture or associate. Okay. So that is it for the disclosure. So let me proceed now. Now we want to talk about how do you prepare segment report. How do you prepare segment report? Now let me first talk about it before you put it down. For purpose of illustration, I want to assume that as a company, you have 3 segments, maybe segment A, B, and C. For preparation of segment report, you will need another column called the totals. So don't write, let me first take you through. Tell us, we have agreed, tell us what are the sales of the segment. What are the sales of segment A? What are the sales of segment B? What are the sales of segment C? And the totals. Then we have agreed, distinguish between the external and the intersegment. So come and say, out of the sales, how much are what we are calling intersegment? Tell us, from this total sales of A, they sold goods to another segment, this much, you remove it. How much are the sales the B made to other segments? You remove it. What is it that segment C made as a profit, as a sale to other segment? You minus. Then you get the totals of the intersegment. Good. Listen. Then you get the net, get the net, get the net, get the net. Now listen. Obvious, this now net amount represents what they sold to other parties. You have taken the total sales. Out of the total sales, you have removed what is the intersegment. What you are left with is the sales that they sold to other customers. We can call them external sales. External sales, or you can call them third-party sales. Third-party sales. So that's one of the disclosures that you are required to disclose. The second one I said is the operating profit. Tell us what is the operating profit of segment A, segment B, segment C, and the totals. Listen again. This last column is like a column we could call the group column, because you are adding all the results of each of the segments and taking it to the combined column called the totals. Now, listen. It is possible, because the segments were trading with each other, it is possible that what you as a segment you sold to another segment, that has made you or that other segment has not sold the goods to the outsiders. And therefore, there could be what we call an unrealized profit. Just like in group accounts, in group accounts, when you sell goods to your subsidiary company, and by the end of the year, the subsidiary company has not sold the goods by the end of the year, there is something we normally call an unrealized profit, which must be eliminated. So now that these segments were trading with each other, then it is possible that there could be what we call an unrealized profit between the inter-segment sales. Good. And so you come and now remove what we are calling unrealized profit. And you remove it, you remove it from the column of the totals. You don't remove it from the individual. No. Just like when you are doing group accounts in financial reporting, whatever was the unrealized profit, you were not eliminating it in the books of the holding or in the books of the subsidiary. You had to eliminate it in the books of the group. So it's the same concept that we are using here, that whatever is the unrealized profit, you eliminate it only in the column of the combined. That is the total. Then you get the whatever is the net there. Now, listen again. Before we continue to the other disclosures, I am through with the sales. Get the point here? I am through with the sales. That disclosure concerning the sales, that disclosure concerning the sales has nothing to do with the disclosure of the profit. No, these are distinct disclosures on their own. In other words, I am not saying now add the profit to the sales or subtract the profit from the sales. No. Once I was through with the sales, that was all. Then when I come to the second disclosure, which is the profit, it has nothing to do with the sales. It stands on its own. That means, again, I am through with the profit. Before we go to the third one, it may be possible that as a company, you may have incurred an expense, but there was no way we could say that expense, part of it allocated to segment A, part of it allocated to segment B, part of it allocated to segment C. In other words, yes, as a company as a whole, you have incurred an expense, but we cannot get a basis of allocating it to any of the segments. Meaning, it's an expense of the business as a whole. Meaning, therefore, when segment A was determining their profit, they did not use that component of the expense. When B was determining their profit, they never used that component of an expense. Why? Because you as a company, you did not have a particular basis of allocating it to any of the segments. So when you have such an expense which could not be allocated to any of the segments, then we call it a common expense. And because you did not use that expense to determine the profit of segment A, segment B, segment C, and so on, then that kind of an expense, which we shall be calling a common expense, that should be charged to the combined column. And you minus. So if there is any common expenses, meaning there is no way or there is nowhere you have been told how to allocate it between the segments, then you classify it as a common expense and you charge it in the combined. Again, as a company, again, there could be an income you made. There's an income you earned this year as a company as a whole. But again, there was no basis of allocating that income to any of the segments, of the segments. So you can't say that that profit or that income, let us allocate a quarter of it to segment A, a quarter of it to segment B. No. So if you have an income that as a business you have earned, and there is no way you could allocate it to any of the segments. For example, you are a company and you have bought some shares from Safaricom. Remember, they have nothing to do with your normal business. No. These are just investments you bought. And that investment gave you an income in form of dividend. There is no way you can say that that dividend, let us give part of it to segment A, part of it to segment B, part of it. There is no basis of allocating it because it was an income for the business as a whole. So when you have such an income again, we normally refer to it as a common income. Remember, you did not use it to determine the profit of segment A. You did not use it to determine the profit of segment B, and so on. So if you have any common income, again, that common income, we shall be adding it to the column of the combined. That is the total, whatever it is. Once you are through, now you are through with the second disclosure. So for common income and common expenses, it's not a must that they should be there in a question, but you find some questions giving you some common income, some common expenses, whatever it is. But we are saying otherwise, the second disclosure is just the profit. Okay, so I am through with the profit, and I've told you it has nothing to do with the sales. This is just a disclosure on its own. We got the third one. And the third one we were saying is interest revenue. You are given the interest revenue. You can even call it interest income for segment A, segment B, segment C, and the totals. Again, it has nothing to do with the profit. It's just a disclosure which stands on its own. Good. Then you come to interest expense. Interest expense. Maybe you are given the interest expense of segment A, segment B, segment C, and the totals again. Good. That's understanding on its own. Again, it has nothing to do. These ones have nothing to do with the other. No. They are standing on their own. After that, we come to the other one. Maybe the next one you are given are the assets. Tell us what are the assets of segment A, segment B, segment C, and the totals. Good. Now, on the assets, I've just used an example like that investment. You have an investment, you as a company. And there was no way you could say that investment belongs to segment A, segment B, segment C. Because you bought it for the business as a whole. And there is no basis of allocating such an asset to any of the segments. No. So if you have an asset that cannot be allocated to any of the segments, then again, we call it common asset. Again, take it to the combined column, take it to the combined column, which is the total, whatever it is. Good. Then from there, you go to the next item. Now that's liabilities. Tell us the liabilities of segment A, segment B, segment C, and the totals. Again, you may have a liability that cannot be allocated. You may have a liability that cannot be allocated to any of the segments. Maybe there is no way of allocating it, but it belongs to the business as a whole. So when you have such a liability that cannot be allocated to any of the segments, then again, we normally refer to it as a common liability. So if you have a common liability again, then you take it again to the extreme. Take it again to the extreme and add it. Good. So I've not used all the disclosures required because even some questions don't give you concerning all the items. Sometimes the examiner would use only 4 or 5 of them to ask you to prepare, segment report, So with that now, let's copy the format of that segment report. Then we do an example from your past papers now. So copy that format now. Copy that format of segment report now. Segment report. So copy that. Copy the format. Then from there we now prepare, or we do a few examples now. So finish. Finish. I want to roll up the question. Okay, let me roll up. I think you are through now. Let me roll up the question format. So copy that other section. So copy up that other section so that we now go and do a few examples. If you are through, you can write the word done so that I know you are through, so that we move on. If you are through, you can chat the word done so that I know you are through, so that we move on. If you are through, you can chat done so that I know you are through, so that we go on. Chat and say you are done. If you are through, you chat and say done so that we move on. You chat and say done. Done. Thank you. So let's go on and now do an example. Let's go and do an example now. I want to project a question. I want to project a question from your past papers. Let me project a question from your past papers. Done. Thank you. So let me project a question. I want us to do it now. I'll share the question in the group later. I'll share the question in the group later. But that's a question that came. That is a question that came in June 2006. No, December 2006. Let me read it. It's a question that came in December 2006. And it said, with reference to IS number 14, segment reporting, that is what it was, the accounting standard before. It was revised. It was IS number 14. Now it's no longer IS number 14. It's called IFRS number 8. It says, wanasema, required, with reference to IS number 14, highlight the information that needs to be disclosed for each of the reported segments. You can see the examiner is giving you their 6 marks for just stating the disclosures required. We have given those 9 disclosures. Number 1, the sales. Distinguish between the external and inter-segment. Number 2, operating profit. Number 3, interest revenue. Number 4, interest expense. Number 5, depreciation and amortization of segment assets. Significant non-cash expenses other than depreciation and amortization. 7, segment assets. 8, segment liabilities. And finally, number 9, we have said any profit or loss share from a joint venture or an associate. Number B, identify any 4 problems encountered in segmental reporting. That one we shall do later. Number C, the following information is extracted from the books of Global Limited for the year ended 31st October 2006. The company sells its product in both domestic and foreign markets. Then you are given the sales of the domestic, another Europe, North America, and Asia. Then you are also given sales between geographical areas, not included above for domestic and Europe. Let me roll the question. After that, you are given the operating profit again of the domestic, Europe, America, and Asia. Other items, general corporate expenses, interest expense, income from investments, identifiable assets, domestic, Europe, North America, Asia. Then you have general corporate assets. Then you have investments. Additional information. Let me roll it up. Additional information. Operating profit includes shilling 62 million derived from intersegment or intergeographical segment sales. That's what we can call an unrealized profit. The segments who are trading with each other, and you are told the operating profit includes 62 million derived from the intergeographical segments, Okay, just give me from the intergeographical segments, whatever it is. So now we move on. Next. They are saying required. We are told prepare a segment report for the geographical and whatever. So you are required. Segment, a statement showing the information on the operation of the global limited in different geographical segments. So that's what we want to do now. So let's prepare our segment report. Please, let's prepare our segment report. Okay, so let's prepare our segment report. So let's prepare that. That was a question that came in December 2006. So let's put it down. December 2006. December 2006. So this company has 4 segments. No, yes, 4 segments. So we need 5 columns. So let's have those 5 columns. You need a column of what? Let me confirm. What are the columns? So you need a column of the domestic, Europe, America, and Asia. So have those 4 columns. So you need a column of domestic. You need a column of Europe. You need a column of America. Sorry, let me space them so that I get enough space. Domestic. Then you have Europe. Then we have America. And we have Asia. And then we shall have the column of the totals. So those are 5 columns. Good. So we start with the sales. So let's go back and pick the sales. According to that, I hope you can see we are given the sales of domestic. Now listen carefully because there is a small trick there. We are given that 76.25, but is that the total sales of the domestic? The answer is no. Why? Look at that next item. The next item, they are saying sales between geographical areas not included above. So it is obvious, therefore, that the 7625 they are giving me up there is not the total sales of the domestic. Why? Because there are some intergeographical sales or intersegment sales which are not included above. So that was a small trick in this question. The examiner wanted you to confuse and use that 7625 to be the sales of the domestic. But they have told you sales between geographical areas not included above. So let us add those two in order to get the total sales for that geographical area called domestic. So I take that 7625, I add that 523. I hope you are following. That gives me an amount of 8148. Put it there. So that was a small trick for this question. The examiner wanted you to use that 76, but you had to remember that it does not include that intersegment sales. Good. Then we go to Europe. I don't know whether theirs is also affected. Yes, it's also affected. We are given their sales, but they have also told us sales between geographical areas not included above. And that also includes Europe, 716. So to get the total sales for Europe, you add those two. That is 1676 plus that amount of 716. That gives me an amount of 2436. 2436. Good. That is the sales of Europe. I hope you are getting the point there. The small trick was that the intersegment sales have not been included above. So it means what we are given above there was not the total sales. No. Next, America. The sales of America was 2325. Does it have issues? No. 2325 for them does not have an issue down there in terms of intersegment sales. No. So for them, we pick it as 2325. We pick it as 2325. Then we go to Asia. They are giving me 766. For them, it does not have an issue. So we just pick it, that 766. Good. Then we combine all the sales to get the total sales now. So let's add all of them. 8148 plus 2436 plus 2325 plus 766. I am getting an amount of 13,675. You will confirm my figures. 13,675. Good. Then from there we said now you deal with the intersegment now. You now deal with the intersegment. So you come and now minus the intersegment. Those two that we were given down there after the sales, they are the ones which were having an issue. The first one was for domestic 523. Put it. Now that's 523. You minus. Then for Europe, what are their intersegment? 760. Good. Put it. For America, they did not have intersegment. We put a dash. For Asia, they did not have intersegment. We put a dash. Total, I think they had already given me the total of the intersegment. And the total I can see is 1283. Put it on the combined 1283. So we minus to get now the third party sales, which we can call external sales. So let's get the external sales. That obviously is 81.48. I minus 523. That is 76.25, that's what they had given us up there. That's what they had given us up there. Good. From there, we now get the Europe. I can even pick for Europe. Europe was originally 1676. That one I don't have to calculate. 17. No. I think it's 16. Let me confirm. 1676. Asia, America, it remains 23. 25. Asia 766. What about the total? I take that 13,675. I minus 1283. And that gives me an amount of 12,393. 392. Good. So that is it for part A, or that is it for the sales. So the only small trick there, I hope you have noticed, was that intersegment. So that the examiner wanted you to confuse and put the third party sales as if they are the total sales for the domestic and for Europe. But we have said you should add them so that you get the total sales first. Good. From there, we said you come to the next disclosure. That was the operating profit. Let's find out. Have they given us? Yes. Good. So let's pick it. Operating profit. For Europe, for domestic, I pick it as 35.75. Put it 35.75. That is the operating profit for domestic. For Europe, 762. 762. Then for America, what is the operating profit? 1262. 1262. What about for Asia? The operating profit is 344. We combine all of them. What does it come to? 35.75 plus 762 plus 1262 plus 344. That gives me a total of 59.43. 59.43. Then I told you, if there is anything like unrealized profit or intersegment sales, there are possibility that there could be intersegment profit, which is an unrealized, which I think we were given as a note somewhere. I do remember we read how much was the unrealized profit. There is a note that told us that the intersegment sales, the intersegment profit was how much. We were given by the additional information that the operating profit includes 62 million derived from the intergeographical segments. That is 62 million. Don't forget these other figures. These other figures are given to us in shillings, millions. These other figures are in shillings, millions. So we are using 62, not just 62 million. They are in millions. Already our other figures are in shillings, millions. So we minus that 62. Good. Then I remember there were some expenses which are classified as common expenses, general, blah, blah, blah. I think I saw some items of that nature in the question. So let's go and find out those items that could not be allocated between the segments. Those are the ones we called common items. And so we were given other items, and one of them was general corporate expenses, interest expense. Listen, though we said you are required to disclose interest expense, listen carefully, there is nowhere they have told us how to allocate that interest expense. And because there is no basis, there is nowhere they have told us in this question how to allocate it, then that interest expense also, we shall consider it as a common expense because there is no basis. The other one is what they are calling income from investments. There is nothing they are telling us on how to allocate it, so we take it as a common income. We take it as a common income. So those three items, we are considering them like common items. One of them is the corporate general expenses. We pick it, that 362. So we come and say here, general expenses. 362, you minus. Next, there is a common item which we have called interest expense. It's another common expense. There was no basis. There is nowhere they are giving us the basis of allocating it. So we take it as a common expense. And the interest expense we are given to be 274. 274. We minus. Then I have another one, income from investments. I think so. Yes. That is income from investments. That is how much? 165. Call it investment income. Investment income. 165. That one we are adding. So let's get now the operating profit for the business as a whole. Let's get the operating profit for the business as a whole. So we take that 59.43 up there, we minus 62, that unrealized, we minus 362, that general, we minus 274, sorry, that interest expense, we add back 165, that investment income. I am getting a total of 5410. Confirm my answers. I hope I'm right. Good. So we are through with this disclosure about the operating profit. So let's go to the next one, as much as the question will allow us. From there, what's the next one? After operating expenses, operating profit, we were given the other incomes. The other one they are giving us is assets. That one we can quote the assets now. Assets. So let's go and quote the assets of segment domestic and so on. Good. We are given the assets of domestic as 10,620, put it, 10,620. For next one, that is Europe, 5635. 5635. Next one is 3205. Then finally is 1516. 1560. So we get the totals. I think they had already given me the total there. Yes, they had given me the total of 21,020. Put it 21,020. Then we check whether there were any common assets. I think I read something like that. We were given general corporate assets and also investments. These are common assets. Good. So let's quote them. We come and say your general assets. And the amount of the general asset is 750. Take it to the extreme. Then we have investment. Again, it's a common asset. Investments. And the investments which could not be allocated to any were 675. So that is 675. So we get the total assets now. Let's get the total assets for the business now. I take that 21,020. I add 750. I add 675. That gives me 22,445. Good. So that is it. I don't think there is any other item according to this question. No. So we have used all the items that the examiner have given you with this question. So that's all. So finish. I want us to do one more. So finish. We want to do one more question just to help us to see how to prepare segment reports now. So let me project the second question if you are through. Let me project the second question if you are through. Okay, so that's the question next that I want us to do. It's a question that came in June 2012. It's a question that came in June 2012. That's the question I want us to do. It was a question number 4C. It was a question 4C. It says, the following information was extracted from the books of Carrega Limited for the year ended 31st of March 2012. You are given the sales of what? Of the food products, plastics, and the pharmaceuticals, and others. Then you are given expenses of the food, plastics, pharmaceuticals, and others. Then you are given other items, general operating expenses, income from investment, again, interest expense. Then you have identifiable assets. You are given for food. Let me roll the question. Among the identifiable assets, you are given for food, plastics, pharmaceutical, and others. Then you have general assets. Additional information. Number 1, inter-segment sales for the year ended 31st of March 2012 were as follows. Those were inter-segment sales: food, plastics, pharmaceutical, and others. Number 2, operating profits include shillings 33 million on inter-segment sales. 3, information about inter-segment expenses is not available. Required. They are saying, prepare segment financial information according to the requirements of IFRS number 8. According to requirements of IFRS number 8. Good. So now again, it looks like we have 4 segments. We have the food, the plastics, pharmaceuticals, and others. So again, we need 5 columns. We need 5 columns. So let's prepare those 5 columns again. This was a question of this June 2012. June 2012. So have those 5 columns again. One of them is food. The other one is plastics, if I'm right. Let me confirm. After plastics, I think it was pharmaceuticals. Yes. Others. Then we have the totals. Good. So let's pick them again. We start with the sales. We go back and pick the sales of the food. This time there are no issues. There is nowhere we have read about issues affecting sales. No. The issues are not affecting sales here. No. So we just pick the figures as they are given to us. The first one is 56.50 for the food, 625 for plastics, 345 for pharmaceuticals, 162 for others, and the total I can see there is 67.82. 67.82. Those are the sales of each of the segments. Those are the sales for each of the segments. And so we want to minus from them the intersegment. We were given the information concerning intersegment as a note somewhere. As a note somewhere. So we less that amount we are calling intersegment. That was given to us as an additional information somewhere, as an additional information somewhere. We pick it. That was note number 1. Food. Their intersegment sales were 55. You minus. So you minus that 55 from the food. Plastics, their intersegment sales are given as 72. You minus. Pharmaceuticals, their intersegment sales were 21. The other one is 7. So 21 and 7. Good. So let's get the total intersegments sales. I take that 55 plus 72 plus 21 plus 7. That gives me 155. We minus. Then we get what we were calling external sales again. This is external sales. External sales. Good. So let's minus. We take that 56.50 plus, not plus, minus 55. So that gives me an amount of 55.95. Then for the plastics, that is 6.95. I minus 72. That gives me 6.23. Good. Next one, I take 345. I minus 21. Getting 324. Next one, I take 162. I minus 7. That gives me 155. Finally, I take 67, 82. I minus 155. That gives me 66, 27. Good. So that is it for the sales. We go to the next disclosure, and that is we go to the next disclosure, and that is the operating profit. Mark you. Let me find out. I want you to listen carefully now. Now listen. This question has given us the expenses. I want you to listen carefully. This question has given us expenses of each of the segments. But we know there is nowhere we are required to disclose the expenses of each segment. You know that. What we are required to disclose is the operating profit. What we are required to disclose is the operating profit, but not the expenses. So the question is, what is it that the examiner is hiding here? Obvious, he was supposed to give us the operating profit like in the other question. But at this point, he has not given us the operating profit. He's just giving me the operating expenses. Now listen. It is possible that you can get the operating profit of the segment. How? You know the sales of the segment. You know the operating expenses. So it is obvious. If you could take the sales minus expenses, if you could take the sales and you minus expenses, that will give you the operating profit. So that was the small trick the examiner was hiding in this question. He has given you the sales, fine, but he has not given you the operating profit. Instead, he has given you the operating expenses. And I've told you, there is nowhere the examiner requires that we disclose expenses of each of the segment. No. Yet he has given us expenses. So the only trick here was, the trick in this question was that you had to determine the operating profit. How? By taking the revenues, which is the sales, you minus the expenses, that automatically will give you the operating profit. So that was the trick in this question. That was the trick in this question. So let's get that operating profit. Operating profit. And I'm saying to get that operating profit, we take the sales minus expenses. Sales minus expenses. That was the only small trick in this question. That was the trick in this question, that you had to determine the operating expenses. Good. So let's get the profit. Our sales of the food are 56.50. I minus the operating expenses 33.35. So let's do it. I take the food, their sales are 56.50. I minus the expense as 33.35. I am getting 23.15. Put it 23.15. That is the operating profit of that segment. So the trick in this question was the operating profit. The trick in the other question was the sales. This question did not have any trick on the sales. No. Good. We move on. From there, we go to the next one. Plastics. Their sales are 625. Expenses are 425. That looks like exactly 200. as the profit. So put it 200. Next, after that, 345 pharmaceuticals, 222 expenses. We minus 345 minus 222. That gives me 123. Good. Put it 123. 123. Next, plastics. No, others. Others, their sales are 162. Expenses are exactly 200. Looks like this one made a loss. 162 minus the 200 looks like a loss of 38. Put it, and you are putting it in bracket. It's a loss. 38. Put it in bracket. It's a loss of 38. Then we get the operating profit now. That will be 2315 plus 200 plus 123 minus 38. That looks like 2,600. Good. 2,600. Then I told you, if there are any unrealized profit, or in other words, if there is any intersegment sales, there could be intersegment profit. There could be intersegment profit. That intersegment profit, we have not earned it. So we check whether there is any. And I think we were given that as a note. Yes. Note number two told us operating profit includes shillings 33 million on intersegment sales. We minus. That's what we can call unrealized profit. And we said you minus on the extreme 33. Then I told you, if there is any common expense or any common income, you adjust the operating profit. And I think in this question we had some. Let's go back to the question again. That's what they were calling other items now. That's what they were calling other items. I can see general operating expenses again. Put it general expenses. And the amount I can see is 562. Put it 562. We said you put it on the extreme column. Good. Next one after general expenses is an amount of, let me start with the expenses. The other one is interest expense. Again, there is nowhere we are told how to allocate it. So make it a common income, a common expense. That interest expense, 65. Interest expense, make it 65. Good. Then I think we have now that investment income. Yes, income from investments, 132. Put it, investment income, 132. Then I think now we can get the totals. So that is 2,600 plus 33, not plus, minus, sorry. Minus 33 minus 562 minus 65 minus, not minus, plus 132. That gives me 2072. I hope I'm right. 2072. Good. From there, we go back to check any other item now. We go back and check any other item, if there is any at all. Yes, we have identifiable assets again. So let's pick the assets and bring them in. Assets. The first one is on plastics. No, food. The assets are 7320. Put it 7320. Plastics 1320. Pharmaceuticals 1050. Others 665. Totals they have already given me 10355. Good. Then I can see the last item there is general assets. That's a common asset, 722. Put it. General assets, 722. I don't think there is any other item, so we pick it. Get the totals now. So I take that 10,355 plus 722. That gives me 11,077. Good. So that is it. We are through. I don't think there is any other thing in that question. Let us go through and check. From the table there up, nothing. From the additional, we have dealt with everything. Good. So we are through with that question. We are through with that question now. So finish. I say one or two things. Maybe we can finish the topic next time. Maybe we can finish the topic next time. So what we have looked at today is what is an operating segment. We have defined what it is. We have said it's a distinguishable component of an entity that, number one, can generate its own revenue, two, can incur its own expenses, can generate its own revenue and incur its own expenses, three, the results of that segment are regularly reviewed by the chief operating decision maker, number three, we have said whose discrete financial information is available. Then from there, we have talked about what are the disclosures required. Those 9. And we have said it's important to remember them. It's important to remember them because there are questions which I've asked you to disclose, especially theory questions, to give the disclosures concerning those segments. Then we have now the format of the segment report. I have talked about the format and we have done 2 examples. So what I'll do next time, I'll finish the topic next time, and our next time is the normal official one is tomorrow in the evening. That is the financial reporting at 8 to 10 in the evening. Now listen, I know I have combined 2 streams. I know I have combined 2 streams of students. I've combined the early morning and the evening. Tomorrow, officially, it is the evening stream. I am now talking to the early morning stream. If they can join us, because tomorrow is a weekend, if they can join us so that we finish this topic tomorrow and we start another topic tomorrow in the evening. So for the evening students, early morning, evening, it's your normal class. But for the early morning students, I'm going to ask you to join us tomorrow at 8 in the evening so that we continue again as a group and finish this topic as a group so that we start another topic again after I'm through with this. So I'm hoping my early morning students are getting that point. My early morning students are getting that point, that we are requesting you early morning students to join us in the evening tomorrow from 8 to 10, so that we go again and continue the way we have done today. That is the group. I've combined the early morning and the evening. Now, tomorrow, again the same. I'll share the link in both. But again, if you are not able to attend, if you are an early morning and you're not able to attend tomorrow, don't panic. The video will still be in your group. You can listen to it at your own free time. You can listen to it at your own free time. So see you next time. See you next time, which is tomorrow. Otherwise, have a good day and have a nice weekend. Bye for now, everybody. We finish the topic tomorrow, then we start a new one. So see you tomorrow. See you tomorrow. Bye. Have a good day. Have a good day. Have a good day. And by the way, let me ask, especially for my evening. Okay. I wanted to find out whether we can meet at 6 instead of 8, or we make it 7. Okay. Let us not interrupt so that the others don't confuse those who are not there today, because there are some students who have not joined us today. Let us just make it 8 to 10 tomorrow. The normal way, the normal class. Let's make it just 8 to 10, so that we don't interrupt with the timing of the others who are not in today. Sawa. Have a good day. See you tomorrow.